Hi, this is Taylor Johnson with Keller Williams Capital Properties, and I'm here interviewing Max Sandler at Tidewater Mortgage, and we're going to do a quick overview of the mortgage market and maybe give you some tips for preparing for a loan. Max, tell us a bit about you.
Yeah, hi, my name's Max Sandler. I'm a loan officer and branch manager at Tidewater Mortgage in Washington, D.C. I'm licensed to do business in D.C., Maryland, and Virginia, and I'm fortunate to do transactions in all three. I've been a loan officer going on 6 years now, and I love the work. Taylor, we're just laughing about this, but it's a fantastic time to be in the market, whether you're purchasing a home or refinancing an existing mortgage. Competitive as always, but a very good time to be in the market. So I'm happy to be here, and thanks for having me.
Sure, thank you. Thanks for your time. And as I understand, Tidewater is a family-owned business, is that right?
We are, yeah. We're a family-owned company. If I'm going to generalize, we're mostly centered around the Mid-Atlantic. We are licensed to do business a little further west than that. We've got brick and mortar in places. We're headquartered in Virginia Beach. We've got brick and mortar in places like, Frederick, Maryland. Our largest office is in Virginia Beach, Washington, D.C., Pennsylvania, North Carolina, South Carolina, etc. We got started actually servicing a home builder. So we're kind of an in-house lender for a home builder and just grew organically from there. And so, family-owned company. We operate like a small business, but we're not. So you kind of always get that white glove service with us. And I think it's something that differentiates us from a lot of other lenders.
I think that's important, right? Because, it's your name essentially that's on the line, right?
Yeah. I mean, I learned this, you learn this quickly in this business, but, I have the good fortune of working with people exactly like you, really solid real estate agents. And I understand intimately that I am only as good as my last deal. And therefore I treat every single one the same. You work equally as hard on every transaction with every referral partner and every buyer, because it may be your last chance, right? And so we are predicated on not only working really, really hard, but providing excellent service. You can attest, Taylor, but we're on all the time, just like you are. So nights, weekends, early mornings, however I can be helpful to my referral partners or my buyers, just please tell me what to do and we'll do it. So, again, I think it's one thing that differentiates us.
Yeah, I would agree. I found you very responsive, and I really appreciate how easy it has been to work with you several times.
Yeah.
So, yeah.
We try.
Excellent. So what advice would you give folks who are thinking about buying a home and trying to figure out how do you go about this approval process? And you had mentioned a little bit earlier, interviewing agents, loan officers. So what sort of things should they be looking for, and how do they go about doing it?
So that's a great question. And it's one thing that I always address. I try to do it with every client. People come into this process having different levels of experience with it. But for sure, any first-time home buyer, at least for me, it's extremely important to understand what this process looks like, because getting you not only pre-qualified, but pre-approved, under contract, and then fully approved for a loan and closing on a house, it's a process. It's not an event, right? What we do on my side, an application is a living, breathing document, right? And a lot of times I spend plenty of time not only interviewing my clients to make sure that I can tell my underwriter a story, but every transaction's like peeling back layers of an onion, right? And we need to make sure we're accurate, and that we're sure. People hate surprises in this industry, me included, of course. So we try to minimize those. But I think, really, we are fortunate to work in a market with a lot of really good lenders, a lot of really, really good agents, buyers that do their homework and are very well qualified to buy homes. And I think that the buyer does himself or herself a disservice by not being fully pre-approved, right? Fully pre-approved before making offers on a house or condo, co-op, et cetera. But it doesn't take long, and again, the reason why I recommend that is twofold. Again, I alluded to this earlier, but we all hate surprises, so why not be sure? If I pre-qualify you and you say you have an annual salary of 150K and we get pay stubs and it's 70, we've got an issue potentially, right? You may not be pre-approved or pre-qualified for what we were talking about. So that's the first thing. Let's be sure. Let's do our homework and get ready. And the second thing is, and I personally think this is really important, and Taylor, you work the buy side and the list side, so you can attest. But anytime a good offer comes in the door, you obviously review it, but you reach out to the lender, right?
Right.
You at the very least want to know that you can get someone on the phone and ask some questions. And so what I always tell my buyers is, if I get a call, and normally I like to be reaching out to the listing agent first, right? Just give a really good, warm, fuzzy feeling we're ready to go. But if the listing agent says to me, so you've got an application, you've got credit, yes. Have you reviewed income, assets, everything? If I say no, that most likely, unless we are far and away better than everyone else, most likely our offer is going to the bottom of the stack, right? We aren't ready. You're not there yet. And so that to me, again, those two things, but that to me is why it's really, really important to take the time to not only complete an application with a lender, let's look at your credit score, make sure you're qualified for the loan program that we're talking about, but really do the legwork to get pay stubs, W-2s, tax returns if we need it. The stuff doesn't take long, and it just puts the buyer in the best position to be successful at this endeavor. So it's time well spent, in my opinion.
Right, and they're going to need that information again during the process of getting contract to closing. You're going to need updates and all that anyhow. So
of course,
get all that documentation together before you start shopping around, right?
Yeah, it's a good use of time.
Yeah, and it can sometimes be difficult to find that stuff, right? Some
absolutely.
people aren't very well organized, or maybe they have investment accounts and so forth, and they have to get copies of all of those statements.
Yeah, again, peeling back the layers of an onion,
Right.
And sometimes it takes more time than others, but again, we're all happy to do the work, and we might as well do it to put not only you, but our buyer in the best position to get what they want.
Great. Now, what would you say for folks who are trying to save up money or have gift money coming into the deal? What are the best ways to work through that process?
Yeah. So, first and foremost, in regards to gifts, make sure that, again, as a lender, I really take the time to interview my clients, right? You have to ask the right questions, and we want as much information as possible. And so that's something that I address up front. What's the source of funds? Where's the money coming from for this transaction? And so who you can get a gift from, the actual human being, is specific. It can't be my mailman.
Yeah, really? Okay.
But it's not that easy. And so
even if the mailman really was so inclined?
Well, if the mailman was my father, then yeah, we'd be fine. But the relationship to the buyer is very important, and it is specific. So you have to you have to nail that first. It also depends on loan program, right? So every program is different. Every program has different rules.
Right. Okay.
And so we try to nail that down soon. Now, one thing that I like to address with our buyers that are using gift funds, really from anybody, but a lot of times with, from a parent, from the generation above us, they're not in any, outside of giving, being a donor and giving funds to their kid, to purchase a home, they're not involved in the transaction at all, right? They're not on the application. I don't need their social security number, date of birth, full name, credit report. I don't need any of that. And so what is important, though, is we are in the business of documenting everything, literally everything, so we're going to ask for plenty, never more than we need, but plenty. So one of the things that a lender has to do is source the funds, right? So I need to know not only where it's coming from, but where did it go, right? And we have to track it. And so, one thing that I address up front with buyers is that, either you or I am going to have to reach out to your parents if it's coming from mom or dad, and get a donor statement for the most part. I need a bank statement showing where it's coming from. Now, I don't care, nor does my underwriter, about anything else that's happening in that bank statement. I just need to source a deposit, right? And now and again, we get pushback from that. Why do you need this, right? And again, from a lender's perspective, I'm never going to ask you for anything that I don't need. The idea is to make it easier, not harder. But that's one of the conversations that's always benefited me, and really, I think the buyer, to get out in front of prior to when you're under contract and you're hustling and you have timelines to meet and all that fun stuff. Outside of that, sourcing and documenting a gift is pretty simple. You need an executed gift letter, and again, you need a donor statement and to show where the money went for the most part.
And some of that documentation is you need to do your financing and underwriting, and some of it is government required movement of funds, right?
Yeah, well, I mean, most of it is to satisfy, as you mentioned, our underwriting requirements, right? I mean, we're not doing it. I think our company's unique in that we're great, but we still underwrite to Fannie and Freddie guidelines just like everyone else does.
Right.
Yes, do we portfolio some of our business? Sure, but we're still not doing anything far different than anyone else's. And so a lot of these are just standard underwriting guidelines. Whether another financial institution has different overlays, I don't know, but we rarely do. And so again, I think it's, after you're fully pre-approved and you're under contract and all that stuff, most of this work should just literally be a documentation game and making sure that you've got an airtight file so that you can get through underwriting quickly. Because of course, as you know, Taylor, speed is key in our market,
Yeah.
But yeah, I mean, you make a good point.
Okay, cool. Well, we'll do the contract to close in a minute. So credit score, I know, is also an important thing for folks. And what tips might you have? What's the minimum, the cutoff point that people should be looking for? And any suggestions for how they might improve their score?
Yeah, great
question. Or maybe things they should not do.
Yeah, great. It's a great question. So, pulling a copy of someone's credit report, and we use a tri-merged credit bureau. So we get one score from Experian, one score from TransUnion, and one score from Equifax. And we use the middle score on a file, right?
Okay.
And I believe it's the same with most lenders.
That's pretty common. Yep.
And so for two borrowers, lenders are going to use the lower middle score. So it's the way that I look at it is it's a more conservative approach, right? And so the minimum credit score requirements differ by loan program, but for us, traditionally we can do FHA loans, VA loans down to 580. Now we're looking more towards the 620. We have some COVID overlays, and we're looking more towards the 620 range for that. On a conventional loan, we go down to 640. But really, when I'm looking at a file and I've got a credit report, if you have really a 600 to, a 680 to a 700, something like that, I normally start to look at, where's the biggest benefit as far as the out-of-pocket cash to close and your monthly payment, and looking at a comparison between a conventional loan and an FHA loan. Mm-hmm. Right? Of course, this is all up to the buyer to choose. I have more information than my clients do, and I present information to them and hopefully educate them enough that they're making an informed decision about what they want, And so, but credit score is one of the first things that probably the first thing that I look at as a determinant to which loan program I'm going to look at first.
Okay.
And as far as, things that you can do, I use a really, really corny saying to all my clients when they have credit questions, but your credit score is a lot like your reputation, right? You take a long time to build it up, right? To build your rep, and you can do one thing, destroy it.
And really destroy it. Right.
Exactly, right? So, the basics generally are make sure that you're paying your bills on time. Make sure that any bill that's due doesn't go past 30 days late. Your score will get hit for that. 60, 90 days, of course, that's not good from a lender's perspective. We also look at if you do have any derogatory credit accounts, how recent are they? How many are they and how recent are they, right? So it's something else that we're going to evaluate. And then something that I see a lot, I'll add two more things, but something that I see a lot is utilization of credit cards. So you want to try to keep that at about 30% or below, 33% or below of your high credit limit. If you're going to carry a balance on a credit card, make sure you just try to keep that as low as possible. The next thing, and this is kind of...
So is it good to pay off your cards and close them then?
So when you close, again, you're kind of, that's a really good question. We're also looking, a lender's evaluating how long you've had an account open. What's that total payment history look like? And so if you have, let's say, a credit card open that you've had for a very long time, never missed a payment, that is a good, I'm looking at that as a positive, right? And any underwriter would too. And so I don't necessarily think you need to pay off and close accounts, right? I just think use what you need. And so if you have one or two cards or, a credit card and a gas card, and then you actually use them, that's fine. I don't think it's a requirement, right, to go out and pick up a third just because. But just, make sure you're keeping, if you're going to carry a balance on a card, make sure you try to keep it as low as possible. I do my best to pay mine off every month, and that's just the way that I am.
Right.
So I think that's good practice. And then the only other thing that I'll add is I don't want to generalize too much. A lot of my first-time home buyers, especially, that are my age, a little younger, have student loans.
Yeah, I was going to ask about that. I'm glad you bring it up.
You see it all of the time now.
It's a real problem.
Well, often. Yeah, I mean, it can definitely hamper affordability. What we can qualify people for, and if you're looking at a conventional loan, right? And again, these differ by loan program, et cetera. But if you're looking for a conventional loan, Fannie Mae, if your monthly payment is reporting as a 0 on your credit bureau, and so anything other than 0, like even $1, we use that monthly payment. That's fine. But if it's reporting as 0, a lender has to use, for Fannie Mae, 1% of the outstanding balance or a documented fully amortized payment, right? And that can be big.
Yeah.
For Freddie Mac, it's 0.5% of the outstanding balance or a fully amortized payment. And so, these kind of things, even though it's not a financial burden, right? Like if you're really not making a monthly payment on your student loans and it's not a financial burden to the buyer now, it will be a monthly liability at some point. And so there are different rules surrounding, how you count it and when you count it and all that fun stuff. But, I tell all buyers, just be mindful of that, like lenders have to do something with that account, right? And there are different rules that govern what you do with different loan programs, but it's just something to be mindful of. And even though you may not be reporting a monthly payment, right? Like even though you may not be paying for it now, there are instances where I have to count it anyway, And so it's just, it's something to, stick in the back of your mind if you're a first-time home buyer and you do have student loans.
I've had clients who were in that situation, and we had to delay our purchase, actually, or our search and more, while she negotiated a payment schedule that could show up on the record, and then we could get a loan, because otherwise her amount that she could borrow was too low for what she wanted to buy.
Yeah, see it all the time. Yeah, it's a good point.
Yeah, so that's why it's really worthwhile to talk to a lender before the process, because sometimes it takes some time to get to the point where you're ready, right?
Yeah, I mean, and I'll just say one other thing with that. I am of the mind that regardless of timeline, if you say you want to buy a house a year from now, I guess you can wait to get fully pre-approved. You can kind of have loose conversations with a lender. I mean, there are kind of back of napkin math ways of calculating, your closing costs, prepaids, your out-of-pocket cash, all that stuff. But a lender, you hear the terminology a lot that a pre-approval can expire or pre-qualification can expire. I don't characterize it the same way. What happens is, and lenders will have different timelines for this, but what happens is that documents that are dated they just need to be updated.
Right.
One of which being your credit report. And so the line that I use for most buyers is that regardless of timeline, it's hard for me to help you strategize about where you want to go and how to get there if we don't have any idea of where you are. right?
Yes.
So if I pull your credit and you have a 600 credit score, we've got work to do, and it's going to take time to do that, right? So there's no harm in updating documents as you go. People, rightfully so, I think, are very sensitive about their credit and credit scores, as they should be. It's critical. It's incredibly important. But it shouldn't harm a buyer if you have your credit report pulled every 120 days, provided that 5 other people aren't pulling it every month too, right?
Right.
So again, I think all in an effort, again back to the pre-approval point, but all in an effort to get you completely prepared, know exactly what you're doing, take the time to get educated with the lender. Again, you speak to people a lot during this process, and the idea being is there shouldn't be any surprises from my end too.
Right.
I don't want you to get a loan estimate and say like, oh my God, this is going to cost how much?
Yeah.
That's not where I want to be. That's not where I would never put a buyer in that situation, and so it behooves us to take the time to do the work. So.
Exactly. Right. So once we are under contract, then what happens?
Yeah,
How does the contractor close? I remember you're telling our clients it's kind of like a race with a lot of interruptions.
Yeah, well, so I learned a while ago that when you're working with a buyer, I try to do as much work up front as I can, and really, as the buyer will allow me to do. But again, let's be thorough. Let's be sure. And so that's my first goal. It's not super intensive, right? Supplying me documentation, me asking you follow-up questions. This is just part of the process. But it is work. There's life, there's work, then there's mortgage and home buying stuff for most people. They don't do this for a living like we do.
Right. And really, you also have timelines.
Oh, for sure. And so,
right.
The first thing I do is, obviously you should have an idea. Hopefully you have an idea, right? That your client is submitting offers. They're going to need a pre-approval letter from a lender, et cetera, right? So I know that we're going in the door. Now, if you, Taylor, reach out to me and say, hey, we're really, really close. We're just kind of hammering down a few details, but I think we're going to ratify. I am immediately trying to set up the next conversation with our client. The reason being is because it's incredibly important, in my experience, to set the correct expectations with what the next couple of weeks are going to look like.
Right.
1 week, 2 weeks out, So I want us all to have the same information. And so really that for me is that next phone call is, hey, we're going under contract. This is the rate today. Do you want to lock it? Do you want to float it? What do you think? Mm-hmm. Okay, great. In a few hours, you're going to get a package of loan disclosures. It's a lot of documentation. You need to sign a bunch, most of which are electronic signatures. But, and then you kind of have to let us do the work. By that point, again, we should have a very, very clear idea whether there's a good chance or a great chance of you getting fully approved through underwriting for a loan, right? And we also, I'll just add a plug, but I work on a team with the same people for every transaction, right? And right. We have access to ask our underwriters questions. So if I'm looking at a file and, if I don't have 100% confidence in it, or I want someone to check my work and just make sure I did it correctly, I'm reaching out to my underwriters to say, please review this. And they do that for us, right? So again, we have a couple added layers of protection, but
that's a real asset, actually.
It really is. We're our organization's kind of flat, and again, it's you feel that it's a family-run business. We're all trying to help each other out. So I'm very, very fortunate that that's what we've got. And it's a big benefit, I think, to our clients too. But at that point, after you're under contract, you really have to let the lender do their job, and it's incumbent upon me to make sure that I'm updating not only you, but our client and the listing agent as we're hitting milestones and moving through the process, right? This is when the appraisal is due. Hey, I have the appraisal. We made value, right? We're through underwriting. I have a conditional approval. This is our timeline. Mm-hmm. And so it is always, I think, it's benefited us to be clear, to be very clear with what our timelines look like, to make sure that if you do have a contract with an appraisal contingency, with a financing contingency, right, that we are hitting all of those timelines. That is my goal. That's my number one goal, to make sure that we that we're compliant, right? And that we operate within the boundaries that, that y'all have given us. And we are, I don't know if maniacal is right. We are so hyper focused on hitting that settlement date.
Yes.
That we don't miss settlement dates, period. Unless something unforeseen happens like that, we are working as hard as humanly possible to make sure that we're getting these deals done on time. I don't care if it's 10 days or 45 days. That is what we are focused on, and so, and that's our goal. So I just tell our buyers, we're really good at this work. Let us do our jobs. There are the communication ebbs and flows when we're waiting, right? When we're waiting through underwriting or something like that. So even if you want to reach out to me and there's no update, some people just want to know that there's no update,
They just want to talk to you, Max. You're a wonderful person.
Yeah, well, I think through all of this, I think transparency and communication is really, really important. It's really important for people to know that they can call me, they can text my cell phone, they can email me at any time they want, and whether I respond at 10 o'clock at night or 6 o'clock the next morning, they know they're going to get someone. And so I think provided that you communicate, that you're hyper focused on your timelines, and that really, again, for us, this is all a team effort. We have this team, we're all pulling in the same direction to accomplish the same goal. So that's it. And I make sure that our client is very clear on where we are, and set expectations accordingly when we're under contract.
Great. And I think you do a great job of that. I think you have some of the best communication I've ever had with an agent on that process. It's wonderful.
I always say, my aim is I'm not trying to be annoying. And so if it's too much, you can tell me it's too much. I love feedback, if it's not enough, tell me it's not enough. And we can make changes accordingly, so I just want to make sure that everyone's got what they need and that everyone's comfortable. And, again, we're all pulling in the same direction.
Cool. Well, Max, I want to thank you for your time. This has been really valuable. I think folks will certainly appreciate knowing about this process. And again, I want to remind them that we're talking to Max Sandler with Tidewater Mortgage. And I'm Taylor Johnson with Keller Williams Capital Properties. So if anybody would like some help or advice on buying or selling a home, please reach out to me. If you would like some advice on getting a mortgage or refinancing, talk to Max, and we'd be happy to help you.
Yeah, you can. I'll just add, and for you too, Taylor, you can find us on Facebook. We're easy to find online. All of our contact information is available there. And if there's ever anything that I can do to help you, help a client, whether it's just to be a resource, again, I am privy to more information than most people have, and I'm happy to provide that. So, whatever we can do to help, let me know.
Awesome. Thanks again. Wait a minute.